Hey guys, new effects with Black Flag Trading. It's April 19, 2019. So we're going to be looking at how do I go after these massive moves, especially in the Forex market. And it just goes back to my philosophy that I've evolved into the last few years, which is the daily and weekly setups and time frames, guys, are that much better to trade. Okay, it limits risk, it limits your need to be in front of the laptop all day. You're not over trading, you're not paying thousands of dollars a year in commission in spread to the broker. Okay, there's a million reasons why, but mainly because it frees you up and because the setups, in my opinion, are that much clearer. Okay, so we're gonna go over a setup I just sent out a couple days ago to my subscribers that I think has a very strong chance of giving us at least 500 to 600 pips. Okay, so this is the pick that I sent out on the 14th. That was Tuesday, I think. It's Friday today, so I was essentially preparing my followers. Prices were up here. It's a pound Swiss, obviously. Okay, prices were about 131 at a time that I sent this out, and you know the email that I sent out are pretty detailed with instructions and pictures and everything else. But essentially, the gist of this is that we're gonna wait for this to come up to around this area. This will be the sell area on the pound Swiss, 32.50 to 300, 130.300. And at that point, I would expect it to go down pretty sharply. Okay, and I'm gonna go to the live charts now. 5 days later, we're almost there. Not quite, but we're almost there. And I want to give you my reasons for going after this. Okay, and what I'm seeing. All right, so let's close this. This is the live chart. 5 days later. Okay, here's a 4-hour chart. So we are slowly creeping up. Okay, prices are slowly coming up to that sell point. Okay, so let me give you my basis for this. Let me delete. Let me show you how simple you can keep this. I'm gonna delete. Let me delete some of this stuff. Okay, I'll leave the notes on there for reference. But listen, very simple, guys. Dailies and weeklies at least is where you want to start. Okay, let's go with the daily. So there's a pair that obviously moves quite a lot. Okay, this pair moves. It can be stagnant at times, but when it moves, it moves. All right, 1,000 pips for this pair is nothing. It can be done within a week. So again, guys, let's follow. Just go back to the basics every time. I mean, you should know by looking at this what we're looking at. We've obviously had a couple of years of somewhat sideways action, but there's been plenty of money to be made here. I mean, huge moves, guys. 121, 131. I mean, these are 1,000 pip swings that you see here. Okay, so what do we have? Well, clearly this pair, I mean, dramatically fell for the better part of 2016 into 17, and it fell by 155. Holy shit. It's about 3,500 pips, 3,600 pips. Okay, so we don't care about that. We just want to know where structure is. So we're in a downtrend, broke the trend line. What do I say? It breaks it, it comes back to the side of it, to the back side of that broken trend line, which now acts as support, and then we had higher highs. Okay, we do the exact same thing, connect those higher highs. Okay, higher highs and higher lows, and we determine our uptrend. We got our longer term line, we've got our short term trend line. Okay, we have to connect this point because we had a new high after that. So what does this tell us? Well, every time these trend lines break, guys, every time these trend lines break, they offer opportunities, even when they don't break, because obviously in this case, you know, this rebound off the trend line, it would have signaled another short if you know how to pair it with Fibonacci's and moving averages. But you know, so we can go off the trend line, but being a counter trend trader primarily, I like it when trend lines break because that's when opportunities come up. So the same thing that we had here, okay, clear break, we had a retest of this broken trend line. This officially, if we were back in time right here, I would have placed a major buy here personally. Okay, this officially confirms. It's not 100%, but I'm telling you, it's 9 out of 10 times. This officially confirms the bottom, or at least the end of this trend line, of this downtrend, and tells you that we're about to probably start going up. And sure enough, it did. So this served this purpose. Now, let's take it a little more medium term, obviously, because we're trading today and not 2 years ago. But I just wanted to give you some perspective. Okay? So I want to show you how I came to this conclusion. So you remember how we had this trend line break here, then it broke it, it retested the backside of it, then it went up, right? In other words, a change of trend occurred after this line was broken, right? Right here. So, well, look what we have here. Let's zoom in a little bit. We had, I mean, the symmetry is not great because of this massive fall. Then we had a short-term lower low, and then we rallied back up. Okay, that's fine. But listen, nonetheless, okay, nonetheless, we have lower lows and lower highs, lower lows, lower high. Okay, so in other words, we had a confirmed downtrend line. Up until this point here, this was the downtrend line, and it got respected, it didn't anymore. Then guess what? New low. So we have to drag, because we have to connect lower lows and lower highs, okay, to properly get that trend. So these trend lines are so important if you know how to look at them. What did it do here? Look, it broke it, momentary spike, drop back to the back side of it. The exact same thing that happened here 2 years ago, okay? Because that's what it does, guys. It breaks it, it comes back to the back side of it, which now acts as support, rallies back up. So now, where are we now? This is a good point in time to do a little analysis, because it could be, it could be ambiguous to some of you guys. Well, what I think is going to happen, okay? What I think, just by looking at this, I don't think this little bounce is the major, bounce back off the backside of the trend line. I think we're going to have a more confirmed retracement and therefore bounce off the side of this major broken trend line to then possibly go much higher, because if you can see what it's trying to form, in my opinion. Where's the head and shoulders? What I think is trying to form, I think we just had our head, and I think we're going for the right shoulder currently. Okay, don't worry about the skewed view. Look, head and shoulders are not always textbook, okay? But I think that's what it's trying to do, more or less. So with that in mind, let's go even shorter term. And same thing, guys. We had obviously an uptrend here, okay? We had a beautiful count, 1, 2, 3, 4, 5 Elliott wave count. Guys, connect those higher highs and higher lows, okay? We had our confirmation that we're, at least for the short term, we're going down. Sure enough, it did. And now we're kind of slowly finding support and just rallying back up, exactly like I said in that pick, because I know this pattern, before this comes down the way I think it will, it has to first come up and complete a certain pattern that I'm about to talk about right now. So where did these prices find support? Well, listen, if you just draw an impulse Fibonacci, okay, don't worry about the little waves, 1, 2, 3, 4, 5, just this major A-B swing. What do I say? After a trend is broken, prices are bound to at least come back to the 38% retracement. Okay, 38 of this AB. They found support, double bottom. That's why I thought we're coming back up. but we're not coming back up, in my opinion, to go to new highs again. I think before that happens, we have to have another impulsive ABC correction. Let me show you. I think we have to have this first. A, B, C. Okay? For us to then really go off of this massive, which is what I think is about to form. A, B, C, and then, let me see, this could go quite high, guys. This could go quite high if it works out, especially if he completes this head and shoulders. Okay, it's a little extended here, but that's fine. The neckline got broken pretty bad here, but that's fine. It can still be a head and shoulders. So again, guys, pattern within pattern, trend lines within trend lines, you can find a ton of opportunities here. I could have easily told my guys to go up on this, because look, even on the shorter term, guys, look at this 4-hour chart. Same exact rule. Listen, just look from the peak, connect those trend lines, broke, came back to the back side of it, forming an ABCD or ABC correction to this. Doesn't matter how you look at it. You can look at it in terms of Elliott wave corrections or ABCDs, doesn't matter. But listen, same thing. Trend line breaks, down trend line breaks, comes back to the back side of it, breaks the short-term downtrend, it goes up. Look here. Upward trend line breaks, comes back, finds support. Now I think it's going to come back to the backside of this broken upward trend line. It's the exact same rule, time and time again. You just have to be aware of your different time frames. Okay, just have to be aware of your different time frames, so that you can know how to navigate. So in other words, to keep it simple, it's not, but that's where experience comes in. It's your job to make the complex simple, okay? But to keep it simple, I think because we've had this massive break of this major downtrend, okay? Couple year downtrend almost. Well, about a year here, but year and a half. But because we had this massive break, I think we're gonna go pretty high here. But before we do that, I think we first have to come back to test the backside of that broken trend line, okay? Which tells me in the near term, we have to first come back up a little bit to then go down to that level, because on the shorter time frames, we have the exact same thing. Break of the trend, test of the backside of it, and going back up. It just repeats this pattern time and time again, guys. Time and time again, okay? So, where do we find our first support? In other words, let's say we were trading this break. Let's say you guys said, okay, there you go. Neo always talks about it breaks the trend line, sell. Well, the first support, yes, is a 38. Sure enough, he sold. He found it. But listen, what I say is not necessarily that once the trend line is broken, sell immediately. Remember, it's not, because if that were the case here, as this broke, let's say you caught it up here, you say, okay, buy immediately. Well, guess what? I think we're gonna go down first. Why? So in other words, you have to time it right. So fundamentally speaking, yes, we have a major shift and change in trend, but you can't just pick that break of the trend line to go long here, because I think we're about to form a new A, B, C, D up, okay? But before even that happens, on our way to C, oh, sorry, that was the ABC. I was looking for that. So we're about to form ABs, right? We buy C's and we sell D's, right? But before even this happens, on a shorter time frame, okay, which essentially completes a Gartley, a bearish Gartley, on a shorter time frame, guys, we have the exact same thing. We have a down A, B, C, D. So this correlation Okay, this correlation, this symmetrical correlation, and look, if you look even closer, I don't want to muddy this shit up, but I hope you can follow me. Look, even on a shorter time frame within this ABC, watch this. We have another A, B, C, D completing at that point. Okay, and that's how I came to this sell level, because this sell level is a convergence A, B Fibonacci swing. Let me take out the ABCD. Okay, so look, it's the 618, right? Clearly, it's the 618. It's the 618 of this AB swing. We're coming here somewhere. I think we can go as far as to the 786, which is why I told my followers that this is the approximate sell zone. Okay, it's somewhere within 132.50 and 133. I think this is where we're gonna hit. We're very close. It's Friday today. I don't think we're gonna get there, but I think Sunday at open into Monday, I think we'll be ready to pull the trigger here. Okay. In other words, I had depicted that from where we were, we're probably gonna go up a little bit. That's why I put this line into our sell point to then come down. Okay. Where does the ABC D target of this setup fall? Well, it's right within the 618 of this major AB, because we're waiting for that C. But I think, you know, to then go massively long on this. Okay, but I think before, you know, the real C is not the 38. In other words, I don't think ABC, I don't think that's the case. I think we're yet to come a little further down for the main C, and the main C is going to be completed by a down A, B, C, D, because there's perfect symmetry, perfect correlation, and perfect confluence of Fibonacci levels. There's multiple Fibonacci levels here that are telling me that this will act as resistance to then take it down, which will be massive support, and then go up. We're not going to worry about that because that's 10 steps down the road, but I think we can ride this down. I think there's a very clear chance that we can ride this down, because I mean, it's a pretty confirmed. Here, let me connect these. Pretty confirmed break. It's retesting the backside of this broken trend line to then go down, which is exactly what I think is happening here. Confirmed break. It's gonna first retest the backside of this broken trend line to then go up. But from here to here, we're looking at 600 pips. We don't want to miss that potential move down. So this is how you want to kind of gauge whether or not you should time your trades, you know, accordingly, basically based on these setups, because you got to know whether or not to get in here. If your bias is that, hey, we're first going down before we're going up, well, listen, why not try to ride that? I mean, shit, we're looking at 500-600 pips. You know, if you want to really be really aggressive, at the time I sent the pick, prices were about here. I could have told my guys to go ahead and even buy this. I mean, we could have literally bought this. We'd be up at 100 pips from now, and would be more if it goes to our sell point. But we could have bought this up, we could sell it short, and we could buy it again. But guys, you can't really ride it up and down like that all day long, or every couple of days, because it requires too much. It requires you guys to keep an eye on this way too much and for way too long. And on top of that, it's not a clear pattern completion. We want to be as surgical as possible, as aggressive as possible once that pattern completes. And in my opinion, what we have here is essentially a beautiful, beautiful Gartley C, D, ABCD completing at that 618. Okay, so for us to really come here, we have to have this C point complete first. Okay, which is the exact same thing on a minor time scale, on a shorter time frame, is the exact same thing as this. Look, A, B, C, D. Okay, this is a bearish Gartley. we're waiting for a bullish Gartley. In other words, we're waiting for prices to come down on the daily here, but on the way down, potentially, hopefully, it works out. We want to be on that ride, right? You don't want to miss 600 pips. So this is how you want to, you know, I covered a lot of things here, but I hope I didn't confuse you guys, but this is how you want to look for opportunities, okay? And this is why I think you have to trade 4-hour minimum to dailies and weekly setups. Guys, you can place this trade. It's going to be ready by, I'm guessing, Sunday the 21st when it opens, or Monday, okay? And I don't think it's going to take that long to get there. I mean, this move here occurred from January 9th to January 24th. Okay, a couple of weeks, but we covered 124, 131. Shit, I mean, that was, you know, 800 pips move. So for 550, seriously, I think we can get it within 2 weeks, 10 days to 2 weeks. Once our pattern has confirmed, once this has completed here at the 132.50 area, okay, I think I'd have to see what prices look like there, but I think it'll be a pretty solid short, okay, pretty solid short, somewhere between 132.50 to 133, okay. Sell. What do you want to look for there? Once prices come up here and they start kind of rebounding, draw those counter trend lines, okay? And once that's broken, it'll be your confirmation, or once you get a candlestick formation here or something, to just have an additional tool, basically, knowing that, okay, now we're definitely going short, okay? I think, guys, we're going to go up a little more to about here, and then I think we're going to drop pretty sharply. Okay, at least to the 618, and that's about a 132.50 to 127. I'm keeping it safe at 127, obviously, because technically it's 120. Well, 126.90. That's close enough, but that's a 550 to 600 pip swing. Okay, so on a half a lot, guys, you're gonna risk about 100 pips here. But listen, you're risking 500 to make almost 3,000 bucks, 2,500 to 3,000 bucks. This is the type of setups that you go after, okay? So if you're going for that type of risk reward, and if you're going for, you know, 2,500 bucks, 3,000 bucks on a half a lot, why not give it 2 weeks? I'm trying to get you guys to move away from that 30 trades a day bullshit. I'm telling you, I've been there. It doesn't work. It doesn't work unless you're a prop trader somewhere where that's all you do. Okay, that's different. But most of you, I'm guessing, got jobs, you've got families, you've got shit to do, you've got school, whatever. This is the only way that's going to free you up. That trading is going to free you up. You're going to be, and you can check it. I mean, you can always check your charts once, twice a day. It's just usually what I do. Sometimes a couple of days go by and I don't have time to check them. Okay, I'm confident because I'll place my stops the moment I get in. Place my stops, place my limit order. That's it. I'm done. I forget about it. I mean, I check it. You know, it's hard not to, but I'm not glued to the laptop all day, guys. Okay. So again, it's April 19, 2019. I think the pound Swiss has a good chance to come down. Before it does, though, we need it to come back up a little more to about 132.50 to 133 area. Okay. This is our sell zone, and I think we have a pretty good chance to come down to 127. That'd be for about 550 to 300 to 600 pips, depending on where you get in. Okay, and I would take profits obviously at 127. At that point, I think we have a solid chance that this baby blows up even higher because it'll form this head and shoulders, but that's too far ahead. Don't worry about that for now. We got plenty of opportunities in the here and now to ride this, okay? So again, let it come up a little more, probably about 7,500 pips from current levels. I would short it, especially if you get a candlestick formation or if you get a violent wick, okay, with volume, especially if it breaks this upward counter trend line, okay? If prices break below this line here, then you definitely have a confirmation there. So I think we're going down to about 127 for 550 pips, 600 possibly, depending on where you get in. So we'll keep our eyes on it. I'll do a follow-up on this. We'll see what happens. All right, thank you. And here we go, guys. Not too shabby. We're about 6 weeks later, which is pretty much exactly what I said this would take. Remember, I said about a few weeks to about a month and a half. Worked out pretty good. It came pretty close to stopping us out. This level was our entry. I put a stop above this last high. I mean, some of you guys email me, you got pretty tight with your stops, and you got stopped out, and I specifically told you guys to actually get back in, because the last resort for this pattern to work was this double top, and that's exactly what we got. And then basically went 700 pips from there. But so there you go, guys. Like I said, okay, to summarize, remember, I thought that after this massive break of the trend line, we're bound to come back, right? Well, the way we're gonna come back from such a high level to such a lower level to touch the backside of this broken trend line, it just never comes down just like that, guys, unless there's a fundamental announcement. It usually is gonna follow your classic X, A, B, C, D pattern and then down. Okay, in other words, a bearish Gartley. Another confirmation for those, again, we knew that we're bound to roll over because the trend line was broken here. The pattern here was coming up to our C sell point. Remember, we did the A, B, C, D to come up, and it came up, and look at the first reaction off of that. To the pip, came down, and then tried to take us out, because that's what it does. Candlestick formations get retested about 60-70% of the time. So, sometimes you don't get this, and it goes straight down. But because you do get this retest, you got to kind of keep your eyes on it. Either allow for a big enough stop or just kind of manually see what's going on. But if you want to be super safe, because we had new mini highs here on this little trend, this is your money right here. Okay, if you really want to just minimize risk, guys, once this counter trend line, like I told you, once this counter trend line breaks, and you got to close there on a daily or 4-hour chart candle, yes, you're pretty damn sure at that point that we're going down. There's no more retest. The retest happens in this area. This area right here is what takes people out. But if you give them enough room to expand, these patterns, guys, more often than not, they work. Okay, it's not perfect. You got to manage it correctly, but and you got to give them time. Okay, even if you got stopped out here, if you got back at the top, guys, at 134, 127, I mean, that's 700 pips down. So if you got stopped out of 100 pips here, guys, it's not the end of the world. Okay, so you just got to manage your expectations along with what the trade is giving you. But overall, very beautiful setup. I'm proud of this one because I've been keeping my eyes on it since before the break even, and I pretty much read this one 10 steps down the line, and I made some decent trades here. But here we go. Not too bad. I hope you guys took a few things from this. All right, thank you.